Well, given recent volatility in global equities, where should we be investing? So let's bring in now Marcus Bogdan, CIO at Blackmore Capital, who is live from our Melbourne studio to take us through some key themes and what stocks tend to be more resilient in volatile markets. Marcus, thanks so much for joining us. So just to answer that question, what stocks do you think kind of in a market like this are best to hold?
We look at it in sectors and industries that we believe are more resilient in more volatile economic times, and they principally come down to three sectors, namely consumer staples, waste management and healthcare. And of those names in consumer staples, we particularly like Woolworths. In the logistics space, we like Brambles. In waste management, we like Cleanaway Waste Management, and in healthcare, we've recently purchased Ramsay Healthcare.
Do you like Coles as well, just to pick up on the fact that you like Woolies? Is Coles also seen as a defensive play at the moment?
Yes, we do. We've got an overweight and active weight in Woolworths, and we do hold a position in Coles, but our overweight is very much leaning towards Woolworths at this stage.
Right, and why is that?
Well, we believe Woolworths is coming from a lower base. It's got a particularly strong balance sheet given the divestments of the petrol stations, where it'll be primarily in net cash, and that will give them the ability to return capital to shareholders in the new year. We think that the earnings are resilient and the balance sheet is strong, and hence that sort of underpins our investment thesis in the company.
In terms of the relative positioning of Coles and Woolworths, my sense has always been that Woolworths has tried to pitch itself as a slightly more premium brand. Do you see those kind of relativities changing with the Coles demerger?
Well, Coles has had a strong focus on their own brand, and that has given them a good uplift in returns. And I think both supermarkets are very focused on getting their fresh offering and improving the take up and basket size in that fresh category.
Marcus, do you have any concerns about muted changes to immigration levels, given the leverage to population growth that these consumer staples businesses have?
Not really. I mean, population growth is always helpful for any business, but we think that both Coles and Woolies, given their physical footprint and the essential need for those products, is well underpinned and can grow at GDP or at a greater rate than that.
Yeah. Talk us through your thinking behind Brambles, and what was the other one you mentioned? Cleanaway Waste Management.
Yeah, Cleanaway Waste Management.
Yep.
Yeah.
And just talk us. Yeah.
Well, Brambles is a global business. It's got a very small revenue base in Australia, and it's principally exposed to both the European and the US markets. It's been a business which has been around since the 1950s. It has a strong moat around its business. It's the #1 operator in the pallet business, and is an integral part in the logistics supply chain, and very much a customer to consumer staples. And we believe that through earnings resilience and a strong balance sheet, and renewed vigour in their management team, that they are well positioned to grow into the future. The other one is Cleanaway Waste Management, which is a vertically integrated waste management company. They had their investor day earlier this week, and we believe that their business is incredibly resilient, valuable because it's vertically integrated. It collects rubbish, it transfers, it recycles rubbish, and it's in landfill, and has a high level of contracted sales through local councils.
And Marcus, just in terms of the consumer staples you just mentioned, do the high PEs sort of keep you a little bit afraid, given that the high PE stocks are a little bit on the nose lately?
I think in Woolworths, and we look at sort of EV to EBITDA multiples, and we believe that they're at fair value at this stage. We also look at the margins that those businesses are attaining. and we believe that over time they are stable, and they do warrant a premium to the market given the consistency, the reliability and the reoccurring nature of their earnings.
Can I throw it out to the panel, actually? And Jason, I'd love to get your thought, I guess, on investing in a volatile environment. What would you be looking at?
So I largely agree with Marcus. Like staying defensive and consumer staples is one area where would have a place in the portfolio. We do hold Woolworths, for example. We know when the company moves to a net cash position, which has never happened in its listed history, they're in a prime position of actually returning the capital back to shareholders. Whether it's Woolworths or selected REITs, and in fact selected regulated utilities. The one thing we have noticed, the REITs have re-rated in general, but the regulated utilities have been left pretty much behind. Where is this sector rotation? It actually hasn't happened for some of the stocks in the utility space.
Yeah.
So yeah.
Okay, your thoughts, Michael?
Well, I'm in the middle of a strategic review because what's worked so well for me over the last 2 years is using those lower volatilities in markets that's depressing option prices to grab those options at lower prices and shape my portfolio that way. And so in the recent falls that we've seen, owning put options has been one of the most powerful tools I've used. However, volatilities have moved up. Having said all that, I seek volatility. That's part of my personal mandate. I'm looking for extraordinary returns.
Yeah.
Don't try this at home. But that's part of my personal mandate. I look for higher volatility. Volatility can rattle investors' nerves, but it's a trader's friend. And so for me, I'm seeing a lot more opportunity than I have seen for some
you
time.
love seeing volatility.
Exactly.
Yeah.
In individual shares, I'm now seeing greater opportunities. Valuation is still an issue across the market, but yes, I'm looking forward to next year.
Marcus, just a final thought from you, I guess, on whether in fact this volatility will continue. And you've pointed out some great ideas there, I guess, in maintaining a resilient portfolio. But do you think this volatility will continue as we head into the end of the year and into the early part of 2019?
I think so, and I think it's important to put it into perspective that in the last couple of years we've had elevated returns in the last financial years on very low volatility. So I think we're coming to a period where future returns will be more difficult and volatility will be heightened, and hence that's why we've got the bias in our portfolios around those more defensive characteristics.
Marcus, thank you so much for joining us this morning. Great insights.
A pleasure.
Thank
That was
you.
Marcus Bogdan there from Blackmore Capital.